Hey, hello investors and future investors. Welcome back to the channel. For today's video, I'm going to show you how to sell options on Robinhood in order to make consistent income and grow your portfolio. If you're new to options or you're trying to use options to supplement your 9 to 5, then you're on the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you how to sell options on Robinhood in order to grow your portfolio. Today's option strategies is going to be beginner friendly as well as cater to more advanced option traders. Now we're going to go ahead and get down and dirty with options. What we mean by that is that we're going to be showing you everything step by step in order for you to learn with us, and maybe you want to practice this on your portfolio. So let's go ahead and get down and dirty with options. For today's video, we're going to be using Robinhood stock, ticker HOOD. Okay, so the first rule of selling options, always make sure you do your own due diligence and select a good stock. By a good stock, I mean a stock that you can relate to, a stock that you know the basics about. So we're going to go ahead, we're going to go down to trade hood options down to the bottom here. And that's going to open up what we call the options chain. The option chain just gives you enough information in order for you to make an informed decision on whatever option strategies that you want to use. Now, with the option chain, you have two choices. You could either do a call or you could do a put. The choice is yours. And you have two choices when doing a call or a put. You could either buy or you could either sell. On this channel, we focus heavily on selling options. So we're going to stick with the sell today. So we're going to go ahead to sell. And then now we're going to go ahead to put. Now, I know you might be asking yourself, why did I choose put as opposed to choosing call? And let me go ahead. I'm going to show you that really quickly. So let's go ahead back into Robinhood. I'm going to show you how to do some basic due diligence. So we're going to go ahead to the advanced feature. Now, let's say you don't know what I'm talking about. All the words I've mentioned so far to you are completely foreign. Then you could go into the stock advanced feature and you could open up this area right here. And then you could go out to 3 months, or you could even go out to a year. I will let you know why the timeline matters in just a few. Now, with the year, what you want to do is you want to enable this blue line right here. Now, this blue line right here is the MA200 or the 200-day moving average. What this line shows you is the stock price trajectory over a certain period of time. In this case, that's going to be 1 year. Now, throughout the year, this stock traded at an average price of around $24, $25. So now we're going to go to the 3-month outlook. And once again, we're going to follow that blue line. Now, this blue line is available no matter what brokerage you're using. So we're going to go ahead, we're going to follow it all the way out. And once again, it's trading around 24 to 25. Currently, the share price is about $40. So let me ask you a question. The stock average price is 25, means that's the average price the stock has been trading consistently. Currently, the stock price is at $40. Is this a stock you would want to get into and buy outright? Let me know in the comments below. Now we're going to go ahead and we're going to go back to our option chain and continue the strategy. So let's go back to trade hood options. So once again, we're going to be doing sell and put. Now, the reason why I showed you that basic due diligence, that advanced feature on Robinhood, is to explain this why I decided to go for put. Now, the reason I decided to go for put is that because the stock is trading so high, this option strategy is going to work way better. The next step you want to do, you want to go ahead and you want to choose your strike date. So the strike date here, we're going to choose the January 10th. And it shows you right to the right here. That's going to give you 8 days in order for this option to expire. Okay, so bear with me. You sell, then you go to put, then you choose your expiration date. The next step to selling options on Robinhood, you're going to have to choose what's known as the strike price. Now, it's highly advisable that you choose a strike price below the current share price. And I'll explain the reason for that in just a second. So the strike price I would be going with is going to be the $36 strike price. Now, the reason why you want to choose your strike price below the current share price is the nature of this option strategy. This option strategy is known as a cash secured put, as you can see to the top here. If it doesn't say cash secured put, you're doing it wrong. do it again. So the nature of a cash secured put is a bullish strategy. Now, what you're saying is that you do not believe that the share price is going to retrace back to $36. That's it in its basic sense. With the $36 strike price, you're going to have an 85% chance of profitability, which means you have an 85% chance of winning this trade. Now, with that 85% chance of winning this trade, you're going to be paid for waiting until January 10th. The amount of money you're going to be paid is going to be 0.27 or $27. In option terms, each option contract is always multiplied by 100 shares. So for your time, you will be paid $27. Now, I'm going to explain this trade to you in just a second. However, one of the most key important factors when selling options or any option strategy, you need to track your trades. So I'm going to show you really quickly how to track this trade, and you could use any basic Excel spreadsheet. So let's go ahead. We're going to jump into one of my spreadsheets. And let's see January. Yeah, January's already filled out for the first week. So let's go ahead. We're going to use February. Okay, so the first thing you want to do, you want to put in the date that you open the trade. So that's going to be January 2nd. The next thing you want to do, you want to put in the expiration date. Now, the expiration date we chose was January 10th. So I'm going to put that right here. Now, let's say the trade is closed before the expiration date, then that date is going to go right here. So for this video purposes, let's just say we close it on the 8th of January, which is not here yet since today is the 2nd of January. The amount of days that you saw on Robinhood to close the trade was 8 days. We're going to put that right here. And then the trade symbol we did use was Robinhood, HOOD. Now, keep in mind that this is just for entertainment purposes only. I do not have Hood in my portfolio. Now, the action you did with Hood, you did a CSP, which short for cash secured put. The strike price you chose, if you remember correctly, was the $36 strike price. And the amount of contracts you chose was one contract. Now, the premium you receive, which is the money you receive for waiting until the 10th of January, that was $27. So you place that right here. Now, it's highly advisable that you close your trades before it expires. So let's just say you close this trade before it expires and you pay to close this trade. Let's say you paid $2 to close this trade, then that's going to go right here. Now, your collateral. I'm going to go back to Robinhood right now to explain to you the collateral before we jump back into documenting your trade. So your collateral is going to be your $36 right here. And that's once again is going to be multiplied by 100 shares. Each option contract is multiplied by 100 shares. In order for you to do this option strategy, you're going to have a minimum of $3,600 in your portfolio. The reason for that is that once you do this strategy, the cash secured put, you need to have some cash to secure the strategy. That cash is going to be your $3,600. What Robinhood is now going to turn around and do is that they're going to hold $3,600 of cash in your portfolio until the end of this trade. Now, let's go back to the tracker one last time. So we're going to put in our collateral here, which is going to be $3,600. Now, as you can see here, your profit on the trade is going to be like $25 because you received $27 and you paid $2 in order to close it. Now, in my book, this is a terrible trade because of your gain here, which is 0.69. My goal when trading and selling options is always to get between 1.5 to 3%. So this would not work out for me. Now, this is all good and well, but let me show you something that's really, really important, and you could document that anywhere you want. Let's put it in the notes for now. Every single time you do an option strategy, let's say we use Hood, you need to reduce your average cost. For now, your average cost is going to be $36. But as soon as you enter the trade, this is going to change. Now, let me show you how you document that. We're going to go into here. We're going to make a quite simple formula. $3,600 minus our $25, which we're going to receive. Good. So your average cost is now going to be $3,500. You divide that by 100 shares, and your average cost is going to be 35.75. Every single time you do this trade over and over, you need to keep reducing the amount of premium you receive. That's going to reduce your average cost. Average cost is extremely important. The reason why it's important is that if you get a sign with the other strategy, this is going to play a very, very heavy toll. Now, let's go ahead and go back to selling options. Now, With this option strategy, this is one selling option strategy, the cash secured put. There's actually two ways this option could go. So come January 10th, if good is trading at any price above the $36 mark right here, then we get to keep our $27. That here is ours to keep no matter how the trade goes. Not only do we keep the $27, our $3,600 that was kept by Robinhood, that amount of money is now released back into our portfolio, and we're now able to use that money again. If you want, you could do the exact same strategy using the exact same stock, or you could use another stock. Whatever decisions you make in your portfolio, that's all based on you. Now, the other way this trade could go, once again, from expiration date of January 10th, if Robinhood is trading for any price below the $36 mark here, then you're now forced to buy 100 shares of Hood at the $36 price point. Here's the good thing. The good thing is that once again, you get to keep this premium you receive here. That remember, this $27 is yours to keep no matter what happens. And that's why I always sell option premiums. The other good part about this option trade, I did mention this at the start of the video, is always to make sure you choose a good stock. Make sure you choose a stock that you don't mind owning in your portfolio. So whatever strategy you're using, if you do get assigned, you do not mind. So now that you're going to be assigned 100 shares of this stock, look at the good news. The good news is that you're now able to pick up 100 shares of Hood at much less than the price it was trading when you just got into this option. So let's just round it off to $40 per share. So now you just saved yourself $40 minus $36, which is going to be $4. Once again, you multiply the $4 by 100 shares and you just saved yourself $400. Now, once you go ahead and you get assigned, then there's a different option strategy, once again, that you could sell in order for you to continue making option premiums. But in order for us not to make this video too long, we're going to stop right here. Now, this is how you sell options on Robinhood. You first go to sell, make sure it always says sell. Then you go to either call or you go to put. We're going to cover this in a supplementary video. You choose your expiration date, then you go ahead and choose your strike price. Once you choose your strike price, you must receive a premium. If you do not receive a premium, that means you're buying and you're not selling. So that's a red flag right there. Once you do that, you wait until the expiration date of the contract. Depends on how the trade goes, then you could decide your next trade or your next strategy. Keep in mind, always document every single trade you do. And I know it's going to be a tedious task, but if you want to continue trading options and be successful in the long run, you must track your trades. Now, if you received any value from this video, go ahead, like the video, subscribe to the channel, but most importantly, if there's other people out there that are trying to grow their portfolio, go ahead and share the video with them. And until the next video, keep pushing your investments.